Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what is going on today. If you want to follow me, it's at @Finance, and if you want to join our community, finding-value.com, that's where I do midweek updates. I do question and answer sessions on the weekend that you can attend and face-to-face interact with me if you'd like with the group and ask me questions. And we also have that coupon code in the corner there special. So we've got $85 Brent proponent. He says Brent is still going to $70 and then $80 within the next few weeks. Don't let the WW3 stuff distract you from inventories being at 420 million barrels already, with the tight market looming this summer. And there we are. Look at the 2025. Look at us just suck down that oil from inventory. It's pretty low, man. I mean, this is getting out there. We'll see if it continues lower. But crude stocks are down 11.5 million barrels. And it is crazy, the move and how fast this is being depleted. Are prices too low? It kind of seems like it. Seems like something external to the markets is impacting the pricing instead of just the news. Inventories generally, when you go down like this, generally the price goes way up. So I'm surprised of where oil prices are at given inventory levels and the decline of inventory that we're seeing in those levels. This is the long-term oil chart. And again, that says still looks solid to me. And again, these are the bull markets, these three bull markets. The bull market, in my opinion, starts at the bottom of the consolidation. So the ultimate beginning is where the beginning green line in December of 1998 was the beginning of the oil bull market. Then you get a wave 1, wave 2, wave 3, wave 4, wave 5. So we've got another three-hump consolidation. This is right on schedule. The bottom is 2020, just like 1998. We've got a wave 1, and we're in the wave 2 pullback that we haven't broken out of yet. Now, could we go sideways longer? Yeah, you could. I don't know the future. I can't tell you, yeah, we're going to take off in 2 seconds or if it's going to be many, many months or a year or two. Difficult to say. What I can say with good certainty here is that the pattern looks similar to previous patterns. It breaks out. Sometimes it goes sideways a little bit, like we've seen in these areas. Maybe we go sideways a little bit before really starting to take off and launch. Right now, the circle of where we're at, I believe, is somewhere where the circle is here, which is 2001. This was the 9/11 attack that brought this down. You know what coincides there? War. You know what coincides here? War. Now, is war the driver of the price move or war a resultant of the condition that we are in? I think it's the latter. I think war is a symptom of the problem, not the root cause. So the war that we've got going on, or whatever the heck's going on, very similar to the same situation that we are in this circle here. It's almost like it's coming up on schedule at wave 2, beginning of wave 3. So everything on the long term for oil looks good to me. Now, I know people worry about the short-term market movements. I don't think you can predict the short-term little market movements, at least not to a very precise degree. Here's another one: oil versus the S&P 500 ratio. And again, I'm everything I do is long term. I want the big move. Oil divided by the S&P still looks good to me on the long term. And when I look at it, nothing's really going to change very quickly if you're looking at it from this view. But what I want you to walk away with is down, up, down, up, down, up, and we're squeezing right into the corner there. Whenever you squeeze a pattern into a corner, you generally get a breakout and a very big move. We are seeing multi-decade patterns breaking. Gold did a 13-year cup and handle. The multi-decade one that I'm watching is platinum, and I'm also watching silver. And oil here, looking fantastic, squeezing into the corner against the S&P. I think we're going to see a big move, like a monster move. A move very similar to, say, something like back here or even the 70s from beginning to top. And another thing that's really important, look at the beginning fractal before it. The beginning fractal, so what this is wave 1, wave 2, and then in wave 3, it's wave 1, wave 2, wave 3. At 4 is the pullback there, and 5 is the peak. Then we went into a big consolidation. This over here could be very similar to what this is coming up in the beginning. The fractal is the same. So if you scroll in, this fractal is the same before what could potentially be a very big move. So I think we could be at the beginning of a very long, big bull market of oil outperforming the S&P 500. Our leader, gold, has already broken out against the S&P 500. So when I look at patterns or when I look at these things, I always look at the viewpoint of beginning of the super long term like this. Then you want to zoom in to see how well it looks. Now, these are big, long patterns. Big, long patterns take time to develop and transpire. So when I look at this, in my head, I think, well, crap, I could take pretty big, long positions in oil, and they will probably last me maybe the rest of my life. Maybe. Maybe half. Maybe it's 10, 20 years, something like that. 20 years would probably be half of what I have left, half of what I have left on this earth. But yeah, something like that. Still looks good though. This is Calvin. He says, I couldn't imagine being long crude Friday. I can't imagine being short now. With new casualties and more missile waves inbound, the chances this ceasefire lasts seems close to zero. Market is going to lose its crap if this is still going on tomorrow. Best to stay out of oil either way. I don't think that's the right mindset. What I look for, it's not volatility that I like. It's the chart above. It's the big long-term, big picture view squeezing into the corner. Now, are things going to get a little bit dicey here in the short term? Yeah, they are. And that's why I'm not going to do anything. I'm just going to be in it, sit in it, and let it throw me all over the place. And when we come out the backside, I have a feeling that oil is going to be much higher than where we are today. The valuation trumps volatility. Valuation trumps all. So if we've got this incredibly good setup in oil and the valuations are good from a ratio perspective, and we are underneath or around the high cost producers' cost curves, then why worry about volatility? You don't have to go on leverage. You don't have to buy options. You can get some solid companies and just sit in it. What do you think Warren Buffett's doing in Occidental Petroleum? He's doing the same thing I'm doing, or I'm doing the same thing he's doing. However you want to say it, it doesn't really matter. If something's cheap, it's got my interest. Volatility, yeah, it sucks seeing the portfolio go up and down a lot, but that's the price to pay to get in an area where you've got this lopsided asymmetry. Monolith Investments. So we've got Cameco breaking out of a Livermore accumulation cylinder. Remember all those Livermore accumulation cylinders I was doing in 2021 with Scott? Remember all those? Well, this is it. We're breaking to the upside of that. It says, while move higher in spot plus term has barely started. Eerily quiet on UTWIT as tourists capitulated and now locked out of the rally. When it gets loud again will be the time to sell. Market's going to do what markets do. Well, if this truly is a Livermore accumulation cylinder, we have a long way to go higher. Like we could see a big, big move out of the uranium space. So the most important thing as an investor to learn, there's a couple of things that I would say are very important. Buy valuation. Do not get too in the weeds with the technicals, in my opinion. Valuation trumps all. When I started my YouTube channel here in 2020, it was August of 2020. The reason I started my YouTube channel is because at work, I continued to tell people that the housing market is going to go up, not down, as many other YouTubers told us that we would experience a gigantic crash in 2019 and 2020. And then I said we're at the beginning of a commodity bull market, and that there are ridiculous setups in the market like platinum, like silver, gold, precious metals, and then also commodities. And someone said, yeah, right. I think you should start a YouTube channel. I said, okay, I will do that. Now, look at that chart. 2020 was down here at the bottom. Do you know how much money people who bought in the general vicinity of where I did, how much money they've made if all they did was sit and do nothing like I have? We went all the way up, and everyone was bitching the entire way on this. All of the newbie investors, all of the tourists, everyone. Yap, yap, yap. Twitter, whoa, this doesn't look like a uranium bull market. Andy, we're not in a commodity super cycle. Hell, we aren't. That's a super cycle if I've ever seen one. Started in 2020. What's the main driver? Valuation. Money's going to roll over into all of these different commodities. And now this is breaking out. What are you going to do now? You're going to go chase? You should have bought at the bottoms or down here being early. The biggest thing that you need to know as an investor is to buy value, buy it early, and not sell. Don't sell for years. My biggest mistake was selling too early when I was a new investor. My biggest mistakes. I sold potential, well, I got liquidated. I didn't sell it. I got liquidated out in where the majority of my money that I was saving in, which was my 401k, I put it in a brokerage account, and I had an all-star portfolio. It was killer. Now, the only way I could have held that in that position is if I would have quit my company, quit working for them, because we got purchased out by a larger company, which then rolled all their assets into another one in 2012. I set that portfolio up in 08, 09, 2010, and 2011. And I was liquidated in 2012, and it had all the grades. And I was holding on. I was like, I'm just going to hold on to this. I don't need to sell. There's no reason. And I was just going to ride through it. And I got liquidated. I was so pissed. I mean, that was bad. And now I'm not making that mistake. I'd rather quit my job. This is me personally. Quit my job than do that again. I mean, that was tens of millions of dollars, if you want to know. Mistake. So this breakout here looks fantastic. We're probably at the beginning of a very big move. Not at the beginning, but like we are starting another big move. Coming down, we've got our crude estimates for this week, the EIA oil storage report. Another draw of about 4 million barrels. What's going on with the price then? What is going on? We've got Arthur Hayes here. I agree with most of what Arthur Hayes thinks. The only thing I disagree with is he likes Bitcoin and I'm not in the crypto space. But we're going to go over this, and I think he's pretty much nuts on with the macro picture. He says, why 9 trillion in new money is inevitable. The moment the entire financial system breaks, and how Bitcoin becomes the only safe haven at 250,000 probably dollars I don't even know what the unit of measure is, per uh, string of hexadecimal system units. So we come down here. He says, we're living in an age where central banks have painted themselves into a corner. And to make things even more terrifying, the creator of perpetual futures sees no escape except through money printing. The 9 trillion debt spiral trap. Hayes revealed the mathematical certainty behind massive money printing. Fannie and Freddie need 5 trillion just to keep the mortgage market alive. Add in banking system bailouts and you hit $9 trillion minimum. But here's the twist. This isn't a choice, it's economic physics. The debt system requires exponential growth or it collapses entirely. Hayes' stark calculation, every alternative to printing leads to immediate systemic collapse. It's the way the system is designed. Sometimes the most obvious solution is the only solution. The foreign capital flight crisis. This one revealed the trigger mechanism. Hayes' analysis showed Asian countries are pulling capital from the United States markets. Taiwan, Korea, Singapore, all repatriating dollars home. Hayes' brutal assessment, when foreign money leaves, the Fed becomes the only buyer of everything. The problem, though, U.S. markets need constant foreign inflows to maintain valuations. Without the capital, asset prices collapse or money gets printed. Hayes' prediction, they'll choose inflation over deflation every single time. Hayes explained what really breaks the old system. Boomers need to liquidate assets for retirement income, but millennials don't want their overpriced houses or dividend stocks. But here's the devastating math. If there's no bid for boomer assets, the government prints money to create artificial demand. Asset prices support becomes a political necessity, not an economic choice. Hayes realized intergenerational wealth transfer happens through inflation, not inheritance. For someone tracking demographic trends, the money printing became inevitable. That's why Hayes saw Bitcoin as the only escape pod. I'm not going to go all the way into this, but all of that big macro, I would say, is true. The system requires the expansion of money in order for it to survive. The way that I am playing it is through precious metals and commodities. They are cheap. I don't know how to value Bitcoin, and I'm not sure how Bitcoin will react if money starts to rotate away from financial assets into hard assets, which I'm fairly certain that is going to occur and has started already. We're in that move from 2020. I just don't know how Bitcoin's going to react to it. It could go up with it. Maybe the NASDAQ goes up. We print so much money that everything goes up together, but the hard assets go up faster because they're so undervalued. That's kind of where my mindset is. Tim Hack says, I think silver is closing the cup now. Resistance above is very weak. We should see $60 this summer. Here's something that I do. It's different than everyone else. All I state is that we're sitting on top of support. I have no expectations in time frame and price. I think I win, or I'm better at holding longer term and winning on the long term because my expectations are so low and I don't care. So a lot of people get so jazzed up that they raise their expectations so high and the price needs to move so fast that whatever price move materializes over whatever time, they're not happy with the move because they think it's going to moon immediately. For me, I don't have any expectation of it mooning immediately. What I do is I look at it and say, okay, there's a big pattern. It's going to break at some point. The bigger patterns sometimes take time. So I'm going to buy a whole bunch and sit. And then I don't have expectations of when. And I don't have a price expectation of when. 60 by summer is a pretty big move. Could that occur? It could. But it doesn't mean it has to. And it could easily do it maybe over the next year even. But does it matter? does it really matter? If silver is going to go way up, does the path of if we do it today, 2 weeks from now, or 6 months, or a couple of years from now, does it matter? If you still get the huge gain, I don't see it as really mattering. And where else are you going to go? Where else are you going to go in this market where you've got such compelling valuation and such little risk? There is nowhere else. What am I going to do? Go sell this and buy bonds? Am I going to go buy overpriced stocks? I don't have anywhere else to park it anyway. So I don't know. That's my take on it. Because when the time comes to buy, you won't want to. $65 oil, no one wants to buy, but everybody wants to buy at 120. It's coming. It's going to happen. This is exactly what's going to happen. The sheep are going to come in at some really high price and tell you why oil is going to continue to go up at some ridiculous level. It's probably going to go higher than 120, but that's what happens. Vanguard Total World ETF. We have a breakout retest. That looks fantastic. I like the move here. It looks really good. Stanley Druckenmiller says, bulls make more than bears. So if anything, being an optimist about life and about things in general is a great attribute as an investor. You just can't be starry-eyed and naive. That's it. Be not a perma-bull, but be a bull. Be a bull and stay a bull when things look decent. And it will more than likely work out pretty well if you can just hold on long enough to make money. Here's Calvin. He says, yeah, let's wash out the oil longs with some bull crap about a ceasefire at the end of the day. It'll be beautiful. It'll be huge. Kind of true, though. Translation, stagflation ahead. Fed's Bostics, I see economic growth slowing to 1.1% this year and inflation rising to about 3%. Wait a second. What about maximum pressure oil sanctions? China can now continue to purchase oil from Iran, says the president. Wait, I thought we were going to put maximum pressure on oil sanctions. Or are we that short on oil and they're panicking and they're trying to control the price of oil? Maybe. Wherever they panic, wherever they're hitting these big hits lower, I am invested in every single sector of those. They're the most short in platinum and silver. I love them. They're going to be probably playing paper games with oil too. I love it. Screw it. I'm going to stay long oil. It's the most valuable commodity to humans, in my opinion. Not in terms of dollar value, but in terms of creating wealth and in our modern society and the systems and the energy and products we get from oil. Here's another one. Under the terms of the ceasefire, both sides having agreed to continue attacking each other as long as the price of oil is capped at $70 a barrel. I kind of laughed at that, guys. It was pretty good. Here's URA. I think he sees the same thing I do. That is one massive green candle in the uranium miners ETF here, basically taking out the entire 4-year range. It is ripping. Looks fantastic. Freight futures AM update, dry bulk. Capesize is down 1%, Panamax flat, and tankers, VLCC is down 11%, Suezmax down 3%. So a lot of that risk premium coming out of tankers and oil. Here's Grady. He says the general narrative now is that inflation is backing down. This chart for wheat below says it's now ramping up again. That's exactly what I see in the markets. I see everything inflation sensitive is ramping up, not down. Called the bear market low for agriculture and the start of the whole commodities bull market in the link posted below. And that's a proper call, not some vague question mark thing. I also said back then that inflation was coming, not deflation. And big inflation surely did start. The commodities bull is a lifetime opportunity and a threat. Getting ready for what is coming is imperative. The wheat chart below says the second inflationary phase is here. Breakout in wheat. Here we go. Is it go time? I'm in the camp. I see stuff inflation that all the inflation sensitive stuff starting to break out. Platinum, wheat, crude oil tried breaking out. You saw what they did to it. They're afraid. They are afraid. Because when it breaks, it's going to steamroll them. It's going to steamroll that currency. It's going to steamroll them because interest rates will go up. And they're panicking, trying to hold it all together. There's another one, obviously silver, and I continue to go over this. This precious metals bull will last many more years, so do not get beat down by the declines or lose interest during them. Understand them, be ready for them. And whatever one does, keep your eyes on the big picture. Silver's now at the pink resistance line. It's ready to go. Guys, this isn't a time to mess around. This is a time to stay long. Stay long in it. When this thing breaks, it's going to move. You're not going to be able to get back in. And again, if people start to panic, it's going to get harder and harder to get physical metals. Because when this thing blows, there's a reason it's going to blow. It's probably people are going to be loading up. Now, the physical might be a little bit easy to get right now. We'll see what happens in the future. It may transfer from America to other countries even. Get ready. And it's the dollar that's going to eat it. All these charts are suggesting that the dollar is going to eat it. They're going to use war as cover. War is going to be cover for them to print, is my guess. So get ready, guys. And again, but that's where we went over last time. So we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Specials that coupon code. And that's all I've got for today. So we'll catch you next time. This is Finding Value.